Christine Browning, owner, broker for HomeSmart Central Realty, and thank you for joining me on my real estate blog. Today I have with me Dan Parr, who is an absolute fabulous CPA here in Bend, and he's here to answer some of the questions that are coming up a lot right now, and that's the changes that are happening in tax laws. People are asking me if they short sell their home, if they're going to have to pay taxes on the loss. A lot of folks have heard this Mortgage Forgiveness Debt Relief Act and Debt Cancellation of 2007 is ending at the end of the year. I believe it's going to be extended, but it may or may not be extended. So what I wanted to do this blog on is in what circumstances a homeowner who does a short sale or foreclosure, because it's both involves debt cancellation, in what circumstances they would not have to pay taxes on the loss. The loss is you owe $300,000, we have to short sell your home for $200,000, there's a $100,000 difference there. Will you or will you not have to pay taxes on that as income? So Dan,
yes.
First of all, what do you think is going to happen? Are they going to extend this is it going to be like December 31st at 11:30? Woohoo, it's been extended?
I'm just going to say right off the bat, I'm really disgusted with the way our government is dealing with our tax situation. As a tax planner, I don't know what tax rates are January 1st. I don't know what tax rates are today because of different alternative minimum tax issues that the government has not dealt with yet. My instinct is they will reenact this. It will be retroactive to January 1st, so they won't get it done until February, March, would be my guess.
I think that's probably a pretty good estimation. But in the meantime, I cannot believe how often I hear people say, I cannot do a short sale because I will have to pay taxes on the loss. And I go, well, I don't think that's true, but I'm not exactly sure in what circumstances it is true or not true. So perhaps you could shed some light on this.
Cancellation of debt is a form of income. The IRS will tax income no matter how it's earned. If a bank loans $300,000, they accept $200 in exchange for that. They've lost $100,000. The bank has lost it. My world, things balance. The homeowner, the lendee, the borrower made $100,000. That's cancellation of debt income. And is it taxable is the question.
Right,
and the
that's
IRS
the question.
has a code section 108 which deals with the exclusion of cancellation of debt income. And there are three ways. First being is if the debt is for the purchase or construction of a primary residence, you'll fall into this new way of part of section 108, which is the Mortgage Forgiveness Relief Act. In addition to that, if it's not really, like if it's just credit card debt, you know, if somebody is in bankruptcy, they can have the debt, you know, MasterCard sends you a 1099-C for $20,000, you have to include that in income. Well, if you're in bankruptcy, you can exclude it. And the third one, which is I think is the most important, is if somebody is technically insolvent, which is if they put together a personal balance sheet and all their assets, well, in this case, if all of their all their assets other than their home exceed or don't exceed the amount they're upside down, then they're going to be insolvent and they would not have to pay tax.
Good to know. And just to clarify, these three exclusions exist with or without this Debt Relief Act. So it doesn't matter if this gets extended, these exclusions apply all the time anyways.
These two apply.
The bankruptcy.
The primary residence exclusion is this.
Got it. Okay, so let's focus on, let's just assume they do not extend it, which we both think they will, but we don't know for sure now, and we might not know for months. So let's just focus on the insolvency issue, which is the subject that comes up a lot when I'm meeting with clients. They need to short sale their primary residence, rental properties. They might have several properties that they're looking at, and they're saying, Christine, am I going to have to pay taxes on the debt cancellation or the loss? The difference between what we sell it for and what I owe. So what I ask them to do is take a look at what the loss is on their home. So again, just to use round numbers, say they owe $300,000, we need to sell their home for $200,000, there's a $100,000 loss at the time of sale. Then I ask them, okay, at the time of sale, say it's December 15, 2012, what are your assets? Not including this house, anything else. What do you have in retirement, savings, personal assets, equity in other homes? You know, add that all up. If your net worth is over that 100,000, then you are solvent. If it's less than that 100,000, you're insolvent, which most folks that I talk to are indeed insolvent at the time of sale, and therefore they're going to be able to qualify for this this relief. So, and the other thing that I wanted to clarify as well, a lot of folks have this idea that if they foreclose, they are forgiven from having to pay taxes on any debt cancellation across the board. And I am curious if that's the case. Is there a difference between foreclosing, short selling, deed in lieu, you know, if there's some sort of cancellation of debt?
I am told there's a difference in how it will affect your credit and when you can buy another home or qualify for a loan. In the tax world, the world I live in, you borrowed $300,000 from the bank, they got paid $200,000, whether they foreclosed on the house and sold it on the courthouse steps for $200,000, there is still cancellation of debt, and that is income. Do you qualify to exclude it? That's what you have to find out.
Right. So folks need to understand that there is not a difference between foreclosure or short sale. If there's cancellation of debt, they do need to address it on their tax return. Which leads me to one final thing, which is, folks will say, if I don't receive a 1099 in the mail, does that mean that I do not have to claim it on my tax return? I can just pretend it never happened?
No. And please do not do something like that. Just one example I give my clients is, Al Capone did not go to jail for murder or racketeering, any of that stuff. He went for tax evasion.
Amazing.
And the IRS will not put you in jail for not paying your taxes, but they will for lying about your taxes. And if you know, the bank went out of business, you know, Columbia River Bank was your banker, whoever it was, and you don't get a 1099, you still had debt forgiven. Debt, income is income, no matter how earned, according to the IRS. There is no exclusion that says no 1099.
Right, right.
You know, and that goes for cancellation of debt or any income people earn throughout the year.
Terrific. So I would suggest, if you have any questions about this topic, your taxes, anything at all, Dan Parr is amazing. I refer all of my clients to him. I've never heard a bad review. He knows his stuff. And, you know, if you're in a situation where you had debt cancellation, even in a prior year, foreclosure, short sale, anything like that, and it didn't get noted on your previous tax return, I suggest you see Dan or your tax preparer and get an amendment and make sure that you are noting it. You are going to be claiming that income, but then you're going to qualify for an exclusion. So don't be worried, just make sure that you are at least disclosing it on your tax return.
It's very important.
Thank you so much for joining us, and if you have any questions, feel free to email or call, and I will include Dan Parr's contact information on the blog so you can get a hold of him.
Thank you very much.
Thanks.